if they issue new shares or to sell existing shares. These decisions reflect the main objective of the company to go public. So, if the company wants to fund business expansion, it will sell new shares or issue new shares to investors, and the proceeds or the cash flow from this IPO will be used for expansion. The process of issuing new shares in the IPO is known as primary offering. While if the founders of the company want to sell all or part of their ownership in this company, they will sell existing shares to public investors, and the proceeds of this sale will be received by those founders. This process of selling existing shares called secondary offering. So IPO is a way to get cash from the company and also from also for the shareholders. And many IPOs are a combination of primary and secondary offerings. Let me show you a sample example. If one company wants to go public to sell new shares to fund the business expansion, so this company will issue new shares of 2 million or equals 2 million shares. And at the same time, one of its existing owners want to exploit this IPO as exit strategy to sell his stake in this company by offering 30 million shares. The required is to calculate the value of each offering type and total IPO proceeds. If the stock price is estimated to be 5 Egyptian pound for each share. Actually, selling or issuing new shares equals 2 million shares refers to primary offering. So value of primary offering will be 2 million shares times 5 Egyptian pound per share. We will get 10 million Egyptian pounds. While issuing 30 million shares of the existing shares, it refers to secondary offering. So the secondary offering will be 30 million shares times 5 Egyptian pound per share. We will get 150 million Egyptian pounds. Thus, total IPO proceeds will be the summation of primary offering and secondary offering proceeds, that is 10 million Egyptian pounds plus 150 million Egyptian pounds. We will get total proceeds of 160 million Egyptian pounds. Real examples from Egyptian IPO market regarding the types of offering involved or included in the IPOs. Most recent Egyptian IPOs such as Talim Services Company that went public by issuing 49 of the issued capital, specifically 358 million shares from its existing or its issued capital, and Fawri sold 36% of its existing shares, and CI Capital and Ubur. So in recent years, Egyptian IPOs include the secondary selling of the ordinary shares. This reflects the main incentive or the main objective of going public to use the IPO as exit strategy for the initial shareholders or existing shareholders or the founders of the company, and to increase the ownership base by joining new investors, either institutional investors or retail investors. The second element in the offering structure is to specify to whom shares will be offered, institutions or individuals. Actually, many companies want to avoid ownership dilution by selling a large percentage of the existing shares in a private offering, where the issuing company will specify certain financial institutions, such as banks, insurance companies, or pension funds, known as institutional investors tranche. And on the other hand, the company will decide to sell smaller percentage of its ownership in a public offering to individual investors, known as retail investors tranche. Eye on the Egyptian IPO market. This table presents the offering structure of most recent Egyptian IPOs. We observe that they are classified into retail and institutional tranches, and the percentage of the institutional tranche is greater across all IPOs. Another eye on the Egyptian IPO market. In the IPO, the issuing company could specify a percentage of the offered shares to be directed to foreign institutions in what is called international offering. For example, the most recent IPO in Egypt was conducted by Talim company, which directed 11 million shares to Egyptian retail tranche and and 34 million shares to the foreign institutions, or what is called international offering. And another example of IPO conducted by RIMDA, which offered domestic offering of 20 million shares to Egyptian retail investors and initial offering of 357 million shares to foreign institutions.